Lots of borrowers were waiting on the U.S. Supreme Court to make a decision on the Biden administration's plan that would have forgiven up to $20,000 in student debt for some. But with the court striking down that plan 2 weeks ago, a big change is on deck this fall. After a 3-year pandemic pause, federal student loan interest will begin to accrue again in September and payments will resume in October. A recent study by Moody's Analytics found as many as 5 million student loan borrowers will need to resume average payments of close to $275 per month and warned of an economic slowdown as borrowers shift budget priorities. Other economists, like John Diamond of Rice University's Baker Institute Center for Public Finance, say the dialing back of consumer spending will help further ease inflation.
I think at the end of the day, whatever positive effect we would have seen from increased consumption would have been offset by the Fed raising rates a little more than they would have to otherwise.
During the shift, Diana Furchtgott-Roth, former chief economist at the Labor Department during the George W. Bush administration, says borrowers have a strong job market on their side.
It's a great time to be looking for a job. Yes, they have to repay their student loans, but on the other hand, there are all these jobs available, both in the public and in the private sector.
The Biden administration has rolled out new options for borrowers ahead of fall repayments. Some will be eligible for a new income-driven repayment plan that could lower monthly bills and reduce the overall amount paid back over the lifetime of a loan. For those meeting certain income thresholds, monthly payments could be as low as $0. Some parts of the program take effect this summer, others in July 2024. And federal student loan borrowers can go to studentaid.gov to see if they are already enrolled in a repayment plan, if they need to change that repayment plan, or if they need to apply. In Washington, I'm Karen Kafa.